Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 4:20 in New York. It is Friday, happy Aloha Friday as we say on the islands, 13th day of January 2017, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we've seen in the market. We do have the precious metals mixed in terms of their closes for today, but we do and have seen a nice gain in both gold and silver throughout the week. First, let's take a look at gold prices. We're looking at futures, COMEX, closing at $1197.80. Net change is down about $2 on the day, the low $1187.50 and a high $1201.80. So we are approaching that 1200, and I do believe that the next move and boost above 1200 will put that in the elements of 1200 being support rather than resistance. Now, when we look at spot gold, basically the same price, $1197, net change a little different. Here we're up a couple of dollars. Now, as far as silver goes, silver traded in essence unchanged today at $16.83. It's traded to a low of $16.61 and a high of $16.85. Of course, we are long both gold and silver with stops in play, and that will be the primary focus of our discussion today, along with what we can expect to see next week now that we are just 7 days away from President-elect Trump becoming the 45th president of the United States. So traders, here we are, exactly 1 week to go before Inauguration Day, and Trump becomes our 45th president. When we look at the action and the dynamics of gold pricing during the period of time up to the election results itself, up to about the middle of December, we can see a market that has been dominated by change. For example, it's quite obvious to see the effect that Trump had when the election results were known. Market moved dramatically higher. That was the knee-jerk reaction, only to close dramatically lower on the day and on the week. That trend continued for 1, 2, 3, 4, 5, 6, 7 consecutive weeks until December 15th. And on December 15th, the market in fact bottomed at around 1123. And from that point, we have now seen 3 weeks of consecutively strongly higher pricing, taking us well within the reach of about $1,200 per ounce, closing just shy of that mark, but I believe that that should be a pretty easy mark to take out. But you can see that this week has really been dominated by higher pricing. We moved from approximately $1172 at the beginning of the week up to our current pricing at $1197. Of course, traders, we did go long the prior week, this last week before, and we are long at 1180. Our stops are in play and in place. We will look to move them up about midweek next week, depending on the action that we're seeing. Now, in terms of my current levels, and most importantly, our current exit target for this trade, what I'm looking at is as follows. As I said during the week, I don't really think we're going to have any real difficulty breaking above 1200. Our next real area that I do want to focus on comes in roughly at 1210, and I don't see a big issue breaking through there. Our actual exit strategy or current target is going to be somewhere around 1249. That is a 38% retracement, and it is a retracement from the last major rally that we experienced, which began at the end of 2015, beginning of 2016, and it was initiated at the lowest price gold had been trading to since trading to 1900 and the multi-year correction that followed. In terms of current level of support, my sense is that there is very, very strong support at 1172. That, of course, is our 61% retracement, and that would be the initial target to go ahead and move your stop up to. I want to see if the market opens firmer next week, if it has any issues breaking through 1210. If we see some resistance come into the market, at around this price point. We're in at 1180, and we might want to pull profits there if we see it just kind of bang through this particular price point. As I said, my target is going to be roughly 1249. So traders, I've gone ahead and pulled up a daily chart. This is just a standard bar chart, and the reason I wanted to use a bar chart is that I want to really focus on our highs and lows. And when we do look back to this low that was achieved, this would be back of June of last year, and we carry it forward. It is a technical area that we can look to see if the market wants to break through. I believe that we should have no issues doing that, but nonetheless, there is some historical data there that at least wants us to acknowledge the fact that we want to look for any potential signs of weakness. Although I have to say, ever since we have seen this market decline and move back up, we have seen it move back up with good vigor and good strength. My sense is that our current upside trend is still intact. Now, silver has been trading in an absolutely interesting manner, and I draw your attention to the chart that I've just pulled up. It is a daily chart, and the one thing that we can see is that ever since silver really hit these highs back at about 21, and of course, this occurred roughly June through August of last year, we've seen it really slip in price and then kind of meander back up. I'm talking about this particular move here in October through November and December, then a sharp drop. Again, a slow slope up and then a sharp drop. And we are now again in this slow kind of meandering move up. And so my caution on silver right now is if we're going to see a repeat of the way that it's traded, at some point we will get that sharp spike down. I would look for it at the top of this channel. That top comes in roughly at approximately 730. Obviously, maintain your current long position in silver. Maintain your current long position in gold. In other news, when we look at the dollar, that has been under pretty dramatic pressure throughout the week. And when we look at pricing over the last 7 weeks on a weekly chart, time permitting, we'll certainly do that. 5 of those 7 weeks resulted in lower closes. Dollar, in essence, unchanged on the day at 101.23. And then the indices and the equities markets were also fairly quiet today. This is kind of the quiet before the storm as everybody gears up for the inauguration taking place next week. Dow Jones Industrial Average, 19,885. The high of the day is 19,952, so still about 48 points away from 20,000. Standard & Poor's also trading quietly today, and when we pull that up, you'll see that it was up about 4 points, but in terms of a net change, about 0.2% at 2274. And then the NASDAQ also had a small move in the market today to the upside, but that was really outdoing some of the other indices, up about 0.5%, and this being the NASDAQ 100 E-mini, which closed at 50.61. So traders, we are looking at a weekly candlestick chart of the dollar. U.S. dollar has been under dramatic pressure, and it's been under this pressure really for the last 3 weeks. When we look at our weekly candlesticks, we talked about this a little bit last week, and we've been talking throughout the week about the identification of a 3-river evening star formation that occurred at the same time that we witnessed a 3-river morning star formation in gold and a bullish Harami confirmation in silver in terms of those weekly charts. Last week, however, we had a tremendous spike in range. Look at these highs back testing that 103, lows coming in just above 101, but it closed in essence unchanged. We had a week of consolidation. This week, we had a return to the lower prices that we have seen recently since it hit this top here. And in terms of straight levels, we talked about the level that I believe exists at about 131. We also note that we have seen our lows hit this particular price point this week and then close well above it. Depending on how we see the dollar act at the beginning of the weekend, if we have a continuation in pressure, most importantly, if we get any kind of a solid break below this particular price point, well, then I think we could go as low as about 99. That would be our next level, and that is a 38% retracement of this move from about 92 up to 103. So traders, we are now exactly 1 week away from the inauguration of our 45th president of the United States, Donald J. Trump. And although nothing is etched in stone, the one thing that I am absolutely certain of, and that is the times they are a-changing. We are really at the doorstep of a new way of really running our country, and the policies that he has been laying forth to the American people and his way of accomplishing those policies and putting pen to paper, so to speak, are truly unique and truly a different approach to any approach we've seen in any other president. Now, there's a key distinction here. Donald Trump is the first elected president to never hold a political office. And I leave you with this thought. If he's able to accomplish half of what he was able to do in the business world, we could certainly expect to see a bright future. That's what I want to focus on today rather than the other side of the coin. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week for another daily update and review. Bye-bye.